broadcast here. You can join us live, dtitrader.com/YouTube. And I'm popping in there right now. And I just want to encourage everybody, feel free to join Tom Busby's YouTube channel. Go ahead and log in, dtitrader.com/YouTube, and make sure you like and subscribe. And might as well, while you're there, join in the chat. Say good morning to everyone. I see that we've got a few people in there right now, adding in my like this morning. And, make sure you're subscribed, you like, and you participate in the chat room. Always good to see everybody there. We'll have a little side chat going as we run things through. Now, the bigger picture is we've got a market to talk about, and we do have to throw out this risk disclaimer here for a market. There is a very high degree of risk involved in trading. You and you alone will be responsible for all the decisions you make. Make sure you make them correctly in a way that benefits your trading account because not everybody trades the same. That's the absolute truth. We aren't all the same. We all approach things a little bit differently, but there are certain things we all have to consider, such as risk. So make sure that the risk profile that you're looking at is the one that fits you as a trader. Be smart about the choices you make. And remember, past performance is not indicative of future results. Looking at some of the big news, crude opened at 102.60. That was one of the big things, maybe driving the market a little bit lower over the weekend. We did have a Sunday night open that was lower than the Friday night close for basically that makes it every Sunday in March. So that's quite an accomplishment there. Not one that I'm sure the Bulls want to be seeing, but the Bears are extremely proud of what they've been able to do in March. So we'll see if that carries through. Overnight high in crude was 103.38. That remains the high of the day. Iran is the big story. Of course, we understand what's happening over there, the conflict, and news on that conflict is going to be a major driver of the market until it's not. So for the foreseeable future, keep an eye on that. Now, this week, we've got 2 days of March to finish out the month, 2 days of April to open up the next. And I think one of the biggest things, and you'll actually get this just about every Good Friday, or at least every one that begins the month of April. So we've had a few of those. The employment situation reports come out on Friday while the market is closed. Like and not just you don't get that little half day with the futures market. This is a major economic report coming out over what is essentially a long weekend. So prepare yourself and understand the risk involved over the weekend. Now, Tom's done a pretty good job laying the foundation of that with you guys, talking about his pocket puts, and I'm sure we'll get some updates on those as we go through. Key levels in this market. That FTD high at 69.11 quarter is simply the high of March at this point. We're not going to be breaking that unless something extraordinary happens in the next less than 48 hours. How many hours is it? About 34? That's going to be interesting. Now, the month opens 68.20. Again, we are heading towards a negative month. 67.1875, the 3 day low. This week's open at 63.80, and the overnight low, which is the current low of the year, not just the low of the month, 63.60 quarter is that low. So keep that in mind. We'll come back to the my opinion part. I do want to let you guys know that the T-Buzz weekly newsletter will be available Monday after the close. So today, after the closing price, Jonathan and Tom are going to sit down and bring that to you. Of course, broad market update, key news for the week, and when we talk about employment, every time we always look at Friday NFP. But let me remind you guys that the ADP employment numbers come out Wednesday morning, and that'll be something that comes out as the market is open. So you want to pay attention to that. Key earnings to watch. We've got a few things going on there. Anybody else having cutting out issues? I hope not. I do speak a little bit quick. So that's the thing about streaming sound. I got to remember to kick in the brakes on a few things. Weekly Magic 5 stocks will be in the earnings report. And then special opportunities. And you got to figure there will be some. Make sure you keep track of that. You can sign up for the T-Buzz Weekly newsletter at dtitrader.com/weekly. All right, let's take a look. Let's see. This is going to be our trade and trade presentation. But I want to tell you that all trades in train and trade are tracked through T-Buzz Talk and Trade, dtitrader.com/TNT. So if you're looking to follow along, that's where you want to be, dtitrader.com/TNT. I need to record that, dub it. Nice solid echo there. New options education resource, dtitrader.com/options edu. More resources here. And let's see. Well, we need to have a few more pages of this, but Tom's first book, Winning the Day Trading Game, DTI white paper
No, no, I
booklet.
wanted you to update that, Chuck. Okay, because we got a lot of other resources we can give them. Special websites and stuff that I think would help him.
Yeah, we will get right on that, Tom.
Okay.
White paper booklet where we have specified topics. Tom's YouTube page, again, dtitrader.com/YouTube. And we've got a pretty good crowd in there right now. Looking forward to having more join us. dtitrader.com/YouTube. The Options EDU site, dtitrader.com/options edu for a little bit more information. Of course, EDU implies it's educational. Tom's BNN interview. And uh, before we get to the FTD stocks, because I know that we're going to be bringing Jonathan in to talk about those, let's go back a little bit, Tom, and your opinion of the market today. What are you looking at today?
Well, first of all, I went through, Chuck. I don't know if you're aware of this or not, but over the weekend I had time to do this. We only have about 10, well, I'd call it 12% of stocks that are in an uptrend out of 100. If you take the Russell 3000 and look at this, that is really an extremely oversold situation. And but here's the problem. It's going to take. There's been structural damage done to the trend, in my opinion, and it's not just going to. It might have a rally, for a short period of time, but it's going to be July, I think, before the market can set course on a real solid trend. That's my opinion. I changed that because after having time to go through the numbers this weekend, let me give you an example. If you look at, let's just say Google. Google this morning opened at 275. With the E-mini trying to go higher, it's still at 273. MU, here's another more striking example, opened this morning at 362. MU, which has been the stars, at 339. All these stocks are selling off. Really, it's sort of a real warning sign when you see that kind of stuff. Like if you have a rally and the stocks are not participating, I guess is what I'm trying to say. Apple, if you think of Apple, Apple's a pretty stable stock years that you follow it, but it was up around 248, 246. I did put CF out there. CF, I found that over the weekend. I like the stock. I actually bought 100 shares of it just to watch it. That keeps my attention on it. And actually, it's up a little bit, not great. But generally speaking, when I see this kind of action, I put on my trading shoes, not my investing shoes. That's the long story short. You've got to, this is a trading market. I'd say 3 days. 3 days is about as much as you could probably stand to one side or the other. So you got to bring out some techniques that will help you with that art of trading. And, it probably wouldn't hurt people to listen to my book, Winning the Day Trading Game, because it's probably more in vogue in this season that we're in than any other time that I've seen in a couple of years. So I think that I'm real careful. I'm real targeted. I don't want to expose myself to losing my equity when I know the sun will come out eventually. Okay, the sun will come out, but sort of an overall tilt a little bit than normal.
Yeah, definitely it is it's it's easily a volatile market, and you've hit on that. The VIX, we're keeping track of that, 2983 on the most recent update. And that's after opening March already in a volatile state at 2466. So things did not calm down in the month of March. Now we're going to go into April, and I think you're right, Tom. It's going to take a little bit of time to get this market to a point where it's calm. And then once you reach that calm state, then you're looking to define a trend. So yeah, it's going to take a little bit of time. I agree. It maybe, hopefully it happens a little bit earlier than July, but it certainly is not going to happen tomorrow, right? So we do have to learn to be patient with the market, let it come to us and let it define what it's going to be. That's a big part of that patience of a trader. You got to let the market be sometimes and recognize that you don't have to be there every day. You don't have to be pushing those buttons every day. We're certainly every day looking for opportunities, but we are reminded that tomorrow has just as many as today, if not more, and the day after will have plenty of opportunities as well. And the same applies for weeks and months and so forth. So, opportunities all the time in the market. You don't need to take them all. We just want to take the ones that fit our trading strategy best. Now, looking at these markets, crude, of course, is one of those bullish markets. We all understand why. Is this a market that you've got some numbers that you have to come down to before you're comfortable with how crude is laying out?
First of all, you got it with crude. You can put that side by side with USO,
Right.
and USO and crude are sort of hand in hand. And crude right now, it's really, if you think about crude, just stand back and think about this. We're now getting comfortable above 102. In other words, where it goes in a spinning mode, and that's probably a sign that we're going higher when you see that kind of action at 102. I think that no matter how you cut it, it just finds a way to have these spike moments, we'll call it, and so you got to be careful on crude. It would have to have a sustained sell off and a sustained staying down. It's had a few moments of brief relief because of announcements and that kind of stuff. But if you look at it just strictly as a ticker, it is it's holding there. It's holding there. Okay, and I think that at the end of the day, you've got to just be careful. That's a good way of saying it. I'd rather do less trading, more education during a period of time like this because it'll chop you up if you're not willing to risk. Let me give you an example. If you were going to go short, let's say QQQ today, you're going to go short QQQ today, QQQ is currently trading at 562, right? 562. If you go think about that, it opened at 567 and a half. That's bearish, no matter how you cut it. Okay. And so what are you going to do? Buy it and hope it bounces a point or 2 points? No, you have to play the downside of it when it's like that. And so that's something that I watch pretty close, actually more probably closer than anything else. I watch that QQQ. It's sort of my gauge to wake me up. And then you look at NVIDIA, it's at the low end of its range. and MU's making new lows as I'm talking. This is not a positive market.
Yeah, Tom, we look at the Mag 7, most of them right in here. And actually, I should probably include AMD, Micron. Just look at this little group here. And the main thing you see, of course, is none of these are above the FTD high. And it looks like most of them are going to be either below that FTD low or definitely below the midpoint. So yeah, the broader market, the champions of the broader market are sitting back and taking a break as this market pulls back. We don't have that constructive push. Micron is, I think, not in the green right here, but actually they're still pretty low. But yeah, a lot of traders looking for discount buying opportunities. And I think what you said in terms of the trend, you're not really looking for those discount buying right now. You're looking for the market to calm down. Is that fair to say?
Oh, definitely, because I would not put, I wouldn't, it'd be hard for me to commit capital to this market right now. I know a lot of people think they're buying it at a low, but I learned a long time ago, nobody knows where the low is. I don't know after 40 years. And my advice would be patient. You'll get an opportunity. You can always get back in and do things when it does start trending. But if you go back and look at the last, 4 or 5 weeks, I think we've been negative for the week. Uh, that's not a bullish market. And then you look at how this market is trading. It pops up, you get your hopes up. Hey, it's going to go higher, and it doesn't even make a new high on the first 30 minutes of the cash market. So yeah, it's the VIX. The VIX is hanging in there, which is a warning sign.
Yeah, Todd putting in here, as Tom says, I wouldn't risk your money right now. Yeah, that's fair. I mean, listen, there are always opportunities. The question is, are they opportunities that fit within a reasonable standard of trading? And the answer is no. We're not looking for that right now. Now, that's not to say that we aren't looking for trades because we absolutely are. But in terms of this FTD algo, well, we are about to start a new month, and that's probably the most bullish news I've got, Tom. We're going
Yeah,
to put March behind
and,
us in 2 days.
and I want everybody to remember something, folks. I've got a 3 day rule. A 3 day rule. No more in your history of listening to me is that more important than to honor that. 3 days is about as long as I'd stay with anything right now.
Right. And so let's see. Let's get back to our slides real quick. For those of you looking for that FTD sheet, looks like Jonathan has posted our slides, and we can get that FTD link up as well. Let me go ahead and copy that and post it into the room here. Or as Jonathan just said, check slide 11 for the spreadsheet. So let's keep going here. Today's topic, reviewing the top 10 lessons from March in train and trade. And I believe Jonathan is taking over the projections. So let's see what you guys got for us.
Yeah, thanks, Chuck. And as we finish up March, Tom wanted to cover or kind of review a lot of the most important topics we covered in March. Thought that was a great idea. So let's go through it. It's probably more than 10 that I put on here, but back on March 2nd, the first trade day of March, Tom said that the VIX futures, they were over 20. They were at 21 that day. That means a defensive market. And boy, has it been defensive. It's obviously gotten worse as the month has gone on.
Put a
But
value on that advice right there. Go back and look at the accounts March the 2nd. So it's not like we're going to drop 7 or 8%. I'm telling you in advance, we got an issue.
yep, VIX above 20 is a sure sign to see lower prices in stocks, and they've come down pretty good bit. That's an ideal time to remind you that 75% of all stocks follow the S&P. So if the S&P is coming down, most of your stocks in your portfolio are going to come down too.
And everybody should say yes, they get it. They've seen it now.
Now, Tom also focused in on crude, which right now is probably the most important market. And on March 2nd, I guess the night of March 1st, crude hit $75 that night. And Tom said if we get above that overnight high, the conflict in the oil area is getting out of hand, right? And we
Before
saw
the
that.
Wall Street Journal, before you heard everybody else talk about it, you had early heads up, pay attention.
Yep. And then we talked about what to do when we're expecting a decline in the value of our stocks, of our portfolio. The number one choice is always you can go to cash. The number one choice is you can always go to cash. And then, of course, you can hedge your positions. So we talked about the married put strategy. Later in the month, we talked about the covered call strategy. All right. And we also, that's on another slide, but this was all covered on March the 2nd, first trade day of March.
Let's just stop there and think about it. We got the first trade day of April coming. You ought to tune in.
Yeah, Wednesday, Thursday, and Friday, April 1st, 2nd, and 3rd. Let's finish up the week with the first 3 days of April. Now, on March the 3rd, Tom reminded, he had already said this in prior sessions, but Tom said the circle the wagons theme remains the theme of the market. Circle the wagons. We also booked a profit put that morning, Tom.
That was our first one, wasn't it?
I
We
believe
put it
so.
on that Friday and got out a couple of days later.
Yep. Now the VIX futures had gotten above 22 at that point. So fear was rampant. And Tom reminded everybody, crude gets above 75, puts the market in sell signal. Now, this is a general insight that played out when the S&P falls over 1.5% in such a short period of time like it did. People tend to say the heck with it, I'm selling everything. So that goes for your stocks, that goes for gold and silver, everything. Tom, then you said at the end of the day, don't lose sight of the bigger picture. By the time the year is done, we'll have a positive year.
Yeah, and I still believe that, but it's not going to be as fast as I originally thought after seeing what I've seen. I've updated my thinking to think it's going to take a little time. July, just where you know, when you have years like this, is a huge date, July the 4th. That is a huge date. Now, there's been many years that the markets look this bad, and after July, you got a whole new theme for the second half of the year. So pay attention to that date.
All right. One of the stocks you introduced in early March you've introduced this at a lot of our in-person classes, Tom, but I think first introduced it widespread at Train and Trade in the early days of March, saying to track the stocks from their 8 p.m. Eastern Time open time. And you can use that 8 p.m. Eastern Time open as a pivot for the day's trading.
I've got everything I'm trading or looking at right here written down. I do it every night.
Talked about what covered calls are. You're in a position where you just didn't feel like you could sell your stocks, you can sell covered calls, protect a little bit to the downside. So we explained what covered calls are, and we gave Tom's long-term covered call strategy as well. So make sure you take a picture of these slides. And I'll post them again into the chat in case you need them. Now, Tom's already mentioned that this is a trader's market, which is perfect for the DTI method. On March 9th, we reviewed the DTI method. We reviewed 24-hour clock, and we reviewed the DTI reference bar approach. 24-hour clock, of course, is what, as we track the markets through Asia, from 6 p.m. Eastern time to 4:30 a.m. Asia is the dominant market. We focus on what's happening over in Asia. Then we move on to what's happening in Europe from 4:30 to 9:30. And then, of course, at 9:30, we get the U.S. traders involved and widespread. And then in the afternoon, we go 1:30 to 5 with just U.S. traders. Actually, it's after 11:30 a.m. Eastern time. We finish out the rest of the day with just U.S. traders. And this is more defined with our reference bar approach. And if you followed along during the month of March, you know how important this is on a day-to-day basis. Following the intraday swings, I'll leave it here to take a picture of it. This is brand new to you. But each of our reference bars are 30 minutes in length, and they give us a reference through that time period. The way it works, above the reference bar, things are looking more bullish than bearish. Below the reference bars, things are looking more bearish than bullish. So they do a fantastic job of keeping you on the right side of the market. And here's a viewpoint of what you'll see on what might be a typical day in the markets, trading back and forth around the reference bar times. Now, on March 16th, we talked about chart reading 101. So this is combining chart reading with those reference bars. Now, Larry says, can you talk about how the RBs are generated, or is that proprietary? It's not anything we can't share with you by any means. This is Tom's reference bar approach that he's developed over the years. The RBs, Larry, are placed at very important times around the globe. If I go back to this slide here, 6 p.m. Eastern time is when the Globex opens, the futures market opens for trading. So futures trade basically 24/5. It's really 23/5. They open at 6 p.m. on Sunday night. They trade until 5 p.m. Monday afternoon. They take a 1-hour break, and then they open up again at 6 p.m. on Monday. Trade all the way until Monday at 5, take a 1-hour break, open again for Tuesday's market. So the actual open of today occurred last night at 6 p.m. Eastern time. And we use that first 30-minute reference bar to track what's happening over in Asia. At 4:30, we have another 30-minute reference bar we call the European reference bar. We track that during the European market hours. At 7 a.m., we have what we call RBX. That's typically when pre-market stocks in the U.S. begin trading. Historically. At 9:30, of course, is the cash open in the U.S. 11:30, RBY, we call that the Genesis reference bar because it's the first time all day that European traders are not influencing the markets. The European markets close down at 11:30. So from 11:30 to 12, we get a good reference point for where the U.S. traders might take the markets the rest of the day. And Tom's got a fantastic insight for that 11:30 to 12 Eastern time frame that the market tends to top or bottom right around European close on most days. 1:30 kicks off the afternoon session when the U.S. traders come back from lunch. That's another 30-minute reference bar, and then RBZ is the final 30-minute stretch. And I mentioned this before, but why are reference bars important? Well, they tend to fall as key markets around the world open or close. And so you get trading volume starts to shift, the action starts to shift, it can. And essentially speaking, Larry, when a new reference bar comes online, you should expect a possibility of an acceleration of the trend or a reversal of the trend. Think about it that way. So make sure you write down, take a picture of the times, and start tracking it every day. And
Larry, our software does it for you, but you can do it manually too. We give you the information right there.
Yep, sure do. So take it serious, Larry. This is very, very important information. It will help you out. If you want to read more about the reference bars, we do have a white paper booklet. We shared it with you earlier, but I'll share the link again, dtatrader.com/WP. The third white paper down is on reference bars. So March 16th time, we talked about chart reading 101, combining that with reference bars. So keep it very simple. Buy signal is a higher high, higher low on whatever time frame you're looking at. Sell, whether that's 30 minutes, whether it's a daily or a weekly or a monthly, right? You name it. Sell signals, lower high, lower low, regardless of time frame. And a stay out is, of course, an inside bar. There's indecision there. That particular day, we talked about married puts and married calls. Most people had heard about it, what a married put is. That's when you have 100 shares long and you buy a put against it to try to put a floor on your stock. So you cap your risk. Buying insurance, essentially. Well, a married call is the opposite. If you decide to short the market, you can buy a call to cap your risk. So we covered both of those on that day. And we got into the latter half of March, and the focus really was, you're seeing this market decline. You don't know what the heck to do. And that was an ideal time to introduce our automated systems, which really thrive in markets like this, where there's a bunch of chaos. And because the automated systems, they don't have any bias. They just follow the numbers. So we had the sunrise signals, and there's a link there to get sunrise. We had Genesis. There's a link to get Genesis. We had Orion, and we had anchor alerts. And if I go to March 17th real quick on the YouTube channel, I'll grab that link and share it with everybody. Because if you haven't been introduced to our automated systems yet, it's well worth your time. Let me just dig up the link and I'll post it in just a minute. Let's see, so that was March 17th. Okay.
All right, quick.
Now, March 24th, Tom, you answered three critical questions. Number one was, the market correction, is this the beginning of a bear market? That was question number one. Is this the beginning of a bear market? And, you said, I'm not prepared to say that. We're more in a month-to-month situation monitoring this correction. And as we stand right here, we're trading at 64.48 on the S&P futures. From the high, just out of curiosity, that's about 8%. And we've only been 1 month. As Chuck and Tom mentioned earlier, April is a new month. So talking about time, April is a new month, a new chance for the tides to shift here. We'll see what happens. The second question was, if you missed the non-US stock surge last year, should you be buying this dip? And if you know Tom, you know that he doesn't buy dips. So this was kind of a, I viewed it as kind of a comical question because I know Tom. But Tom's not going to go buying a dip just because it dipped. Okay, so Tom doesn't think this way. Instead, pay more attention to what's causing the uncertainty. All right, and right now that's crude oil directly, and as an indirect of that, crude oil inflation fears, that's the VIX spiking, right? Those are your two markets, crude oil and the VIX, to pay attention to. Now, Tom has given numbers over the month for each of these. The VIX number kind of stays set in stone 20. The VIX has got to fall below 20. Tom, what's your updated? Do you have an updated number on crude?
Yeah, I would use crude. I mean, for today, I'll give you today. I would use crude 102.80. 102.80 is the pivot number for crude today.
And that's kind of the value of being here at Train and Trade. Tom's never short of giving you key numbers for the day or bigger picture numbers as well throughout the months. Now, the third question was, with all the uncertainty around the world, why has gold fallen? Why is gold been falling? And we answered that earlier today, but worth saying again, investors just tend to sell everything when there's uncertainty. They raise cash.
Yeah, think about it. Say you're over here long Microsoft and it's falling off the table and you're up on gold and silver. Well, investors and traders look at it and say, well, I better take my money out of this one over here to cover this loss over here. It's called a balancing act. Always happens when you have this kind of sell-off.
Let's see, March 26th, I think, was one of the more, people seem to really love this one as far as finding the connection between what crude's doing and what the market's doing. So tracking crude, when crude falls, the S&P is going to rise in this market. So we've looked at ETFs for a rising market, and then we looked at the flip side of that. Crude rises, the S&P is going to fall. So we looked at ETFs for a falling market. Now here's the crude falls, S&P rise case. If crude falls, of course, your bears are going to be USO, directly related to crude oil, and SQQQ is inverse to NASDAQ. So if the crude oil falls and the S&P rises, then SQQQ is going to fall. While TQQ, QQQ, SPY, Diamond, they're all going to be bullish. XLK Technologies ETF, SMH Semiconductors ETF, they're all going to be bullish. And SCO is the opposite, the inverse of USO. So as crude falls, directly inverse to crude falling is SCO going higher. And then, of course, we have the flip side of that. If crude rises, then your USO and your SQQQ are going to be bullish. And your markets to short, your ETFs to short will be SPY, QQQ, TQQQ, Diamond, XLK, SMH, SMO, or SCO. So that session is really focused on cutting out the noise, giving you clean markets to trade with either situation, crude rising or crude falling. And probably the top lesson of the month, Tom, at least in my opinion from going through it, was managing the market downturn. Not every month is a month like this. Most months are not like this, right? But managing the market downturn is a critical part of having success in trading the market. So the best way to do this is T-Buzz Talk and Trade. The link is dtexture.com/TNT. Tom, I wanted to look at a couple of the postings that you put in there this morning. So at 5:17, and Tom does start bright and early Eastern time, said the VIX futures was at 2780, a drop of about 2 points from its high. You remind everybody there's a lot of anxiety in trading this market, so you got to be patient, exercise patience when you're trading the market. Not just this market, but the market in general, I'd say. And you also said at 8:49, put your trading shoes on. And you mentioned this in the live session this morning. You said this type of severe damage that the market has done to the bull case, it is some severe damage to the bull case. So this is going to be a battleship ground. The bulls and the bears are going to be fighting back and forth. You said for some time now, and you gave the date of July 4th just a moment ago in our live session. So it really puts a good framework for everybody about what you're thinking, the time frame of what you're thinking this conflict and the market turmoil will last, and kind of gives you a chance to regroup how you're thinking about the markets. You also said, yeah, from that, you said put your trading shoes on, and that put a smile on my face, Tom, because that's what you do in TNT every day, especially with your Magic 5. There's a couple key levels. You said QQQ below 562.40. That's where it found support and bounced back up. So 568.55 is to the upside. All these numbers can be used on a daily basis. So the rest of the day, if QQQ falls below 562.40, should see some more downside pressure come in above 568.55, the opposite. The adjacent, right now we're trading between these numbers, by the way. The adjacent numbers on the SPY, 634.40 to the downside, 637.55 to the upside. And fertilizer, you said CF above 142.55. Should see another leg higher. So none of these have triggered off yet, but the Magic 5 gives you a daily, at least 5 tickers, if not more, where you can set alerts on your platform and get an edge, get a jump start on when that movement starts to come in, that volume starts to come into the market to move stocks up or down. And of course, got to stay prepared. And the number one way you do that inside TNT, but also for the free T-Buzz TV, is with your daily pivot. 64.45 is the daily pivot on the S&P. We're trading right there. Trading right there. We're doing a good job of pivoting around the pivot. It's a reminder today is Monday. New trade, new week starts on Monday. We usually use Monday as a watch day for action like this. A lot of times there's some indecision on Mondays, and then we get to Tuesday, we start to see some trading pick up. That's why historically Tom had said Monday is a watch day. So that was kind of the theme of the day for TNT. There's opportunity at certain key areas, but for the most part, can require some patience. All right, folks, last night, Tom introduced, I was there, the market timing indicator. Now, that's nothing new, but there is a new addition to the market timing indicator. It's very interesting. The dashboard today looks like this, where it's giving you confirmed longs on tickers like USO and CVX, and it's giving you shorts, Microsoft, Boeing, UNH, Google. Those are the top 6 choices from the MTI dashboard today. And these are not day trades. These are swing style trades. And the really cool part about this is there's a little history tab. So you can see the history of these signals. And it has been quite good. Looks like 51 total trades, win rate of 76%, average return of 53%. Again, this is not a day trade. This is a swing trade for the month. There's your number of wins versus losses. Look at that best trade, 400%. Worst trade, negative 92%. Pretty cool stuff. This is, I think they're making some last minute edits to this. It should be on the one-click membership area by the end of the day, from what I've been told. So it's the same MTI by DTI, but just the addition of the dashboard. So you've got your MTI by DTI on the Thinkorswim platform. And then you get your MTI market dashboard actually on the member site, oneclicktrading.com. So, yep, it's coming soon. I've been told it'll be there this afternoon.
And I'll do a master class on this sometime probably next week, I'm thinking. But there's certain ways that you can really enhance the postings in there. And, I'll just give you some techniques I use that make the thing go way up. So got that to look forward to next week. We got to put it on the schedule. I'll get you figure out a time. But I just think that this is something that's sort of going to be big for people. It's got, by the way, it ties into my thinking in this type market. 3 days, roughly 72 hours. So perfect time to release it. And a lot of work went into this, but I think it's going to make life simpler for people to get find those tickers out there to pay us. I'm all about keeping it simple.
Yeah, we'll schedule that in, Tom. I look forward to actually digging in and teaching it, learning it myself. Yeah, keep it simple, John said.
Anybody got any questions about this, the value of it? It really will, you get sort of biased when you watch the market and your accounts down and that stuff. And it really puts a cloud over the sun where you're not thinking right. You'll know it'll be an unbiased viewpoint that will help you, I think. When you see stuff in here start working, you got a history tab to check it. I love it.
Tom, you spoke about this last night at the planning session. I figured I'd cue that recording up and we'd have a listen through it. Get a lot more info, listen to that.
Say what now?
You spoke about the new addition here to MTI by DTI last night at your planning session. So I've got that video I can queue up anytime. We'll have a re-listen to it.
Yeah, I think you ought to play. I wouldn't mind listening to it a little bit myself because I never hear myself see what I said, but it was the presentation covers this and really gets into a lot of good stuff. It shows you the power of an unbiased viewpoint following numbers only. I think that's worth a lot when you take the DTI method and apply it in that fashion. I even have to get biased sometimes, I'm just saying everybody does, but I think you'll find it comes down to putting on trades that make you money, and this is going to lead you to the right place. Especially after we finish that master class next week, it's really going to be a souped up way to lead you to the right place. So I'm excited about teaching it. I'm excited about you being part of it. So take a listen, and I'll listen with you.
Hey, Tom, as I cue this up, where is your CF trading now? If you don't mind telling me.
Okay. CF trading about 138. Been size 142. Hadn't triggered to the upside yet.
Well, we got on the CF when the conflict in Iran started going on, and price, obviously price of fertilizers is affected. So that was early March. How about January 8th when MTI by DTI said go long CF at a price of $80 a share?
Well, you're giving them the real stuff now.
Well, that's what you get with market time indicator. So long-standing history already in place, but we now got this very exciting new addition on the website called the MTI dashboard as well. So
yeah, and once we get, hey, let me tell you, the value is really going to show itself in the short term, but it's also if I'm right on the market after July 4th, I mean, you're not going to be able to keep up because what happens is when the market does hit that sweet spot, it happens so fast, you can't keep up. And this is going to help us keep up because you have to admit one thing, the computer works a lot faster than we do.